Okay, Friday, the 24th of May, 2024. And I wanted to really check in with why we've had a negative reaction yesterday down on equities. And to me, it's clear, but I've spent a lot of time, trading these economic data figures and seeing how the market reacts, on the button of the data releases, and how then it reacts over the coming session and weeks and so on and so forth. But what I wanted to address with this video is getting the clarity around why I think the markets moved down yesterday. Now, I realize I'm just adding to the noise of people saying why we moved down yesterday, but for me, I feel very strongly about this because people don't really look at the nuances of what happened yesterday. And it's as simple as this. Yesterday, we had a miss on the initial jobless claims figure. Came in 215,000, expected at 220. Last week, it was a rise. So I wanted to get the clarity around why we sold down yesterday, and it's because we had this weaker than expected initial jobless claims, i.e., unemployment figures dropping. Okay, to my mind, this essentially puts us into this sort of scenario here, where you see if the jobless figure is rising, that then feeds into a more dovish Fed, because then they are going to be thinking, well, we are going to probably have to cut rates if the unemployment figures are rising, the jobless figures are rising, all right, because then, the market's reacting to the rates where we have them, so we maybe then have to cut. So then that puts us back at to the September 2024 cut. If the jobless figures are dropping, that means that the economy is still running strong. All right, that less people are claiming unemployment, more people are back to work, the jobs market is strong, and so therefore the Fed are going to be leaning on, well, okay, we can't cut, because if things are running really strong and hot, we can't cut into that, because then maybe we'll feed an inflation problem. So they're going to, it then pushes them to the decision area of saying, we're going to keep rates high, rates should stay high, and maybe, and this is a source of a lot of discussion at the moment, is maybe the next move is going to be a hike rather than a cut. Okay, so I just wanted to kind of get that thinking straight. And to some of you maybe watching this video, this is like just so obvious, but to other people, maybe it's not that obvious at all. So durable goods coming, in 1 minute here, guys. But I just wanted to note, right, the reaction that we had on the S&P yesterday from that figure on the button here. Now this, if I zoom in here, the high of day was where the initial jobless claims came out, and look at the reaction. So to me, there is no other reason for the sell-off here other than that. The fact that this feeds in, the drop in initial jobless claims feeds into a more hawkish Fed, and for rates to stay high. And that's it. All right. Keep it tight. Talk to you later.